Today is the 13th of April and I'm taking a look at the Euro Australian dollar on a monthly time frame using Serene Education's FX Ultimate 4 strategy. Here we can see by our matrix box it is primarily red and that price is trading below the 200-day moving average on all time frames except for the 4-hourly. Here you can see I've already put in a Fibonacci retracement tool going from the high point of the start of that trend to the low point, and we can see here that price is using the 23.6% as a support as it has done previous to this. We've got a red arrow, a red candle, RMO is below, and SMA is below but dark, showing a slowdown in momentum as price finds support on the 23.6% fib. So dropping now down onto the weekly, here we can see a pullback against that downward trend. We are making lower swings though, and price has been using the 20-day moving average as a resistance. You can see these red arrows are getting lower and lower, and therefore the trend direction is still to the downside. We've got a blue arrow, a red candle, RMO is below, and SMA is above and bright because of this pullback off the 23.6%. However, the current weekly candle is starting to trade lower than the previous week's close and to the underside of that 20-day moving average. Dropping now down onto the daily, we are getting a very bearish candle trading very much lower than the previous day's close and below the 20-day moving average. We've got a blue arrow, a blue candle, RMO is above, and SMA is above but dark, showing a slowdown in momentum. Now, we can see that we have been in a downward trend and we're getting a pullback against that downward trend. So we can put in a little trend line here and see that price is still trading to the upside of that. Looking at price, if it continued to fall, it could use the 50-day moving average as a support, as it has done previous to this as well. So in terms of daily traders, there are no opportunities on this pair. You're going to be looking for a daily close lower than that 50-day moving average to then target that 23.6% fib again, or alternatively waiting for a break below the 23.6 to then target those next levels. So let's have a look at this on an intraday opportunity. We can see here that our trend line is also the 200-day moving average. We've got a red arrow, a blue candle, RMO is above, SMA is below and bright. So the FXT part of the strategy is not set up, but we are getting some negativity coming in or through that momentum of the SMA. Looking at the distance between these two, you've got roughly around about 54 pips. It's not a great trade. Really intraday, I'm looking for a bigger target than that, but it could be an opportunity should you get a break and close below that 4-hourly to then target those next lows.